Okay, so Encik Abbas, you came across my radar because Encik Faiz did a really good service to us all by interviewing you, I think about a year ago. And I was really quite impressed, not just by his interview skills, but also how openly you answered his questions. And it's very clear that you want to have his listeners and everyone else understand their investments with ASB and with ASNB more. But my first challenging question to you, I never quite understood which football team you support. He supports Man U, so he keeps trying to make all these references. But which team do you support? That's why we're all here tonight.
For the record, it's Liverpool.
Okay.
But I've been supporting not recently, for the past 20 years.
20 years. So not a Johnny come lately lah. You held it when the stock was very low, and then you held it all the way till now.
Yes.
And
yes,
that is why I wanted you here, because I am also a long-suffering Liverpool fan.
Who finally...
Who can finally wear the jersey, and it's not dusty lah. So that is the... Okay, now that that's out of the way.
Okay.
I wanted to get into your role at ASNB. Can you share with us what is ANB's role under the umbrella of PNB?
Okay, first and foremost, Ken, thank you for having me here, and thank you everybody for turning up. Means a lot. One thing that I think we haven't done a lot is really sharing the story of PNB, ASNB, and I'm always passionate about this. I've been with PNB for a good 18 years since I started working, and until now, so a lot of untold stories. And because it's such a small crowd, I think today you ask anything, I'll do my best to answer, even though it's borderline secret or anything, secret recipe for PNB and all that. Okay, so going to PNB, ASNB, a lot of confusion. Who is PNB? Who is ASNB? So PNB Group, to put it simply, PNB is the investment side, ASNB is the distribution side. So the one that goes to the market and push all this, promo, push the product and all that is ASNB. PNB takes the money and manage it and provide the return back to unit holders. So it's really simple as that. In between, and my role before I joined ASNB, I started with PNB as a real estate analyst, and then I became or pretended to be an economist because I did engineering. But they asked me to do economics, so I tried. And then after that, I did M&A, mergers and acquisitions of strategic companies. So you've heard about all this Sime Darby, merger, demerger, and all that. And then I started, before this, PNB never had a strategy team. So we created a strategy team, and I'll explain later the evolution, but I did strategy for a good 6 years. So you know what they say about strategists, right? They always blame the results to the execution. It's never their strategy. So after a while, they asked me to execute the strategy at ASNB. So that's the story. And for the longest time, I've been looking at the overall asset allocation of our funds, ASB, ESM, and all that. And now I'm a full-time salesman.
Yeah, it takes one to know one, and you're doing a great job, I think. And we will talk about ASNB's myriad of funds. I know there are a lot of funds that probably don't deserve quite the spotlight that they do. But we'll talk about them later. I wanted to focus first and foremost on the flagship funds, ASB 1 and 2 that we all love. I think we all know what the basic product is, but I wanted to start first with the mandate. What is the purpose of ASB 1 and 2? How is it intended to be used by the unit holders?
Okay, so there's a long history of ASB. As you know, PNB was created in 1978. Our first fixed price funds was actually called ASN before it was switched to ASB. But back then, the issue is really, if you don't mind some history, the issue is really people are not investing. People are so afraid to invest because they're not knowledgeable enough. They always fear that whenever they put their money into investment, they will lose the money. So this is where I think credit to our forefathers, they really thought about it well. So if you think about it, the issue about people not investing is because one, they always need the money, so liquidity is important. They are afraid that they lose the money, so that's why we created fixed price. And back then, it's very hard to find access or to start an investment. That's why we partner with all the major banks, all Post Malaysia and all that, so that people can invest easily. And the mandate was really, back then, was to put the money into corporate Malaysia. So if you recall, there was a target, and this is mostly ASB, to reach 30% ownership in the Malaysian economy as a whole. So ASB has always intended to, in the past, to invest in Malaysia, and until 2016-2017, the allocation, the underlying assets are all 99% domestic. But, okay, so this is where the mandate has evolved. So when we think about what, because we operate with a dual mandate, one is to increase participation in the economy by Malaysians as a whole, and also to deliver returns. And we define returns because it's a fixed price, right? The alternative to a fixed price is either savings or fixed deposit, right? So the objective, the return objective is always to deliver 200 to 150 basis points above FD. So if FD is giving you, say, 2.5%, we'll deliver around 4.5 to 5%. But of course, the psychological target is always 6% for us. So when we talk about a mandate and we have evolved, we have to prioritize which one comes first. Is it the ownership or is it the return? And when we prioritize the return first, because we thought people wouldn't even want to invest with us if we don't deliver the right kind of returns to the profile of assets that or investment that you guys do. So when we talk about generating 250 basis points above FD, okay, so, and we are fixed price funds, right? Going a bit into strategic asset allocation, the team I headed for the past 6 years, we have to construct a portfolio. Okay, you imagine if your father gives you a certain amount of money, say 1,000 ringgit, he tells you, go somewhere, but don't lose my money. So naturally, you will think like, okay, so where do I put this money without the risk of losing it, right? So you either put into, fixed income instrument, like bonds and all that, which typically gives you 4.5%. But when we give you 4.5%, everybody will be screaming, right? So we created an asset allocation where we have a good base of very low volatility asset return, such as fixed income. But to make sure that we can generate higher, we invest in equities. But even within the equities, there's an allocation. There's equities that gives you very consistent dividends. So I'm sure some of you are very familiar with our companies. We have Maybank, we have SD Guthrie, we have a slew of companies that gives you a very stable dividend. But on top of that, we also have an allocation into what we call tactical trading that from time to time can give you that extra income. So the way we construct, so we have within our asset allocation, and very limited people have this knowledge, it's not only equities. So from 99% equities, we have diversified the portfolio. Now we have fixed income about 15%. We have real estate, which is about 10 to 15%. So, and then we have domestic equities, which is about a good 50%. And since 2017, we have diversified into global stocks, which is around 20%. and the rest of it is in money market. Because you imagine, every day people will want to redeem because it's very liquid, so you need that extra cash. So imagine the challenge of managing ASB. So every day people want to take out money, so you need to have some cash, so around 5 to 10%, but that reduces, so 90% of the portfolio needs to work to get to the 5 to 6%. So at the same time, you cannot tolerate the value of assets to reduce below RM1 that you invest with us.
So, just to summarize, could you maybe state, as of recently, what is the actual breakdown or asset allocation in terms of bonds and equities, and also how much is overseas and local?
Okay, I start geographical first. So geographically, 75% domestic, 25% global. Within that, from asset class standpoint, about 50 to 55% into equities, both domestic and international. And then we have real estate, about 15%. And then we have fixed income, about 12%. And private markets, private equity, which we do, about 5%. The rest, mostly cash.
Okay, so let's talk first about the domestic exposure. And the domestic exposure is obviously quite balanced because you mentioned the participation in the Malaysian economy. So you have strategic stakes in all those large companies that you mentioned. And then also there's bonds, right, that have been issued to bond investors, including large institutional investors like PNB. So in terms of the domestic exposure, and you mentioned some trading as well, right? Some tactical trading. In terms of the domestic exposure, what is the intention of the domestic exposure? Is it to deliver steady returns, or is it to take some risks? And then we'll move on to the international side, which I think is to take more risks. But where does the domestic one fit in the overall portfolio? What is the role of the domestic exposure?
The bulk of our domestic exposure is to really churn out stable yield through dividends. So our allocation to strategy companies right now is about 30%, but the bulk of it is really Maybank. So we own about 50% of Maybank, right? And Maybank is about 100 billion market cap. So that alone is 50 billion investment into from ASB, ASM standpoint. So it's the stabilizing part of the allocation. The rest that we do is really from capital gain perspective as well. But this is where, and I'm sure you guys are very sophisticated investors as well. If you look at the KLCI, for the past 10 years, if you just put, generally into the stock market, it's either you make 2 or 3% through dividends, or if you don't get dividends, potentially you either lose money or it remains flat, right? And our new asset allocation that we set was in 2018. From 2014 to 2018, we figured that we're going to go through a very flat environment in the stock market in KLCI, simply because there's a lot of, turbulence happening, both political, both stagnant in terms of the economic policy direction. So that's when we really start to invest globally.
Okay, let's shift gears to then global, right? I'm sure there was a bit of tension because the role is to participate meaningfully in the Malaysian economy. So having that change in asset allocation, I'm sure there was the political side, but it's undeniable that the risk return is better in, let's just say, the US market. Global is a bit too maybe broad. KLCI returns are uninspiring, so you have to look abroad for better risk return. The S&P has done tremendously, 14% on average over the last 10 years. NASDAQ, 17%. Gold has done amazing. EM, emerging markets, recently also I found out has been performing. So when you look at foreign, do you just go to the major equity markets and allocate according to the market cap, or do you have a more specialized approach?
So when we started our global public equity journey, we started with developed markets first because we thought that would be the easiest, at least from entry standpoint, in terms of trying to really value each stock based on fundamentals. And we sort of like took the Berkshire Hathaway sort of like mindset and approach where we do value investing. So we look into companies that we feel that have good long-term value, good growth, and that's where we started. And until recently, only we went into emerging countries like Indonesia, Vietnam, China. But most of our allocation is in the United States or some in Europe. And it's not only direct investment, we also partner with certain external fund managers. But we gave them what do you call it, a mandate, absolute ROI mandate. So whatever it is, they have to generate above what we give out to our unit holders, 6%. But because it's public equity, the mandate is always about 9 to 10% to generate in the US and developed markets in general. So we've been doing this for a while, and I think we are getting good at it. So if I mentioned to you the exposure, say, is about, from international standpoint, global equity is about, overall portfolio, global equity, say, is about 15%, but it has always been giving us, in terms of share of income, much more than 15%. And it was in 2022, especially, when we give out the lowest ASB dividend. I think that was 4.25%. That was the lowest in our history. But it could have been lower if we didn't invest globally. So at that time, global equity stocks exposure was only 10%, but the share of the revenue was about 30 to 40%. So without that, I think we can only give out 3.5% at max.
Yeah, that would be a very tough place to be for the unit holders lah. So you can see how it's coming together. You got the local exposure for stability and obviously a wider role to play in the Malaysian economy, and then you have the foreign holdings, primarily in equities, which is meant to generate alpha for the fund. Just sticking to the foreign side of things, how do you manage FX? Do you really hedge, or do you kind of like invest in a broad basket so they kind of cancel each other out, diversify each other out? What's your outlook there?
Yeah, so when it comes to hedging strategy, there's a short-term and long-term position that we take, right? So for investment that typically takes a gestation period more than 3 years, more than 5 years, those are the things that we actively hedge. But for public equity, it's close to make no sense for us to hedge because you really need to go in and out. And if you go contracts that, very short term, the cost is quite high. So from a financial standpoint, it doesn't make much sense to do that. So we really factor in when we go into the certain assets, certain stocks. We also factor in the currency analysis also when we, from the entry point to the exit point. But so the beauty of ASB is that we have PNB as well. So the way it works is that some stocks that we sell, if say the currency at the exit is not exactly to our basically it's underwater, right, from the current standpoint, but we already make money from the stocks specific, right? So we have PNB who can actually absorb that. So basically, between PNB and ASB, we can sell it at at market level, but at that same currency. But when we translate back into domestic, that's where PNB will return the exact gain that we make into the domestic, into onshore banking. So I guess this is another unique angle about PNB and ASNB mechanism. So a lot of people ask us, how can we manage to do, sorry, digressing from your global, but I thought it's important to share with you. A lot of people ask us, how do we manage doing Ringgit or fixed price unit trust fund? So the beauty of it is PNB has a proprietary fund which is about 50 billion. And then you have ASB, ASM, whose asset is about 280 billion, right? So from time to time, if there's depletion in terms of NAV below Ringgit, this is where PNB proprietary comes in. And proprietary money comes from a seed funding that we got initially from the government, 500 million, which we have grown to 50 billion now.
Wow.
And this is the source of, stability. Whenever we need, there's liquidity from PNB.
So this prop fund is separate from the fund itself,
It's
right?
totally separate. So
Right.
yeah.
And that was based on an endowment of 50, which you've grown skillfully to 50 over 20 years, 15 years.
45 years.
45 years, okay, so it's compounded over many years. Okay, so it's clear that foreign allocation is important to ASB for the returns. Is there any intention to increase the allocation, or is there like a hard limit, or is it something to be negotiated every few years based on the administration?
All I can say is directionally it will be increased because KLCI, the domestic market is really, really tough. And if you think about it, in terms of growth, it's hard for us to beat the developed markets. But having said that, developed markets come with their own risks. Right now, it feels a bit overheating. But in the longer run, I think there could be, a refocus into Malaysian stocks, but not at the moment. So if you ask me whether exposure will be higher, yes, it will be higher. And to a certain extent, from a portfolio standpoint, asset allocation standpoint, we believe that the more diversified the portfolio geographically, the better. And the other way to think about it is our fund is growing faster than KLCI, right? So for the past few years, we've grown about 5 to 6%. So the Malaysian market remains stagnant, but our funds is growing, so naturally you just have to take it up.
Yeah, there's probably a certain amount of overcrowding that you want to avoid, and you're not just the only big fish in these ponds. You have EPF as well.
So exactly, if you put EPF, PNB, Huap, Tabung Haji, Khazanah, we are about 40% of the market, which is, a cycle thingy. Market is not moving so much because when times are bad, we don't sell. When times are good, we don't know who to sell to. So it's a factor why the market is doesn't move as fast as the other markets out there.
Okay, coming back home to the domestic part of it, it was clear earlier on you said that your strategic holdings that give out dividends are very important to the fund. And obviously, as a board member of these huge companies, these GLCs, you would, to a certain extent, dictate the dividend policy. So how do you balance the growth of that company, which you also own, with the dividends that you need to realize for unit holders?
I would say we dictate the policy because our engagement has always been at the board level. So, for example, right, Maybank, we don't meddle with their strategy, long-term strategy, who do you loan out to, what's your long-term consumer strategy, we don't. So, but what we tell them is that, look, for us to be able to give people 6%, you guys need to at least give us 6%. And how they translate that into dividend policy and all that, they will work it out, right? But we do believe by active involvement in this company, not active in the sense that we meddle again on the management side.
You govern.
Yeah,
Not
we
meddle,
govern, yes. But we can create value through mergers and acquisition activities. For instance, right? I think the last big merger we did was in 2017, 2018, when we look at Sime Darby as a whole. The group at that time was about 30 billion, 35 billion, but it has a lot of, they have plantation, they have auto, they have healthcare, and they have a lot of ports and all that. So we said, perhaps it's better if the valuation is done based on business. And when we demerge these three companies from 30 billion, the value combined, although separately, becomes 50 billion at that time. So holding strategic companies is not only for dividends, but it also enables us to do value creation activities. Value creation activities, there are two parts, right? One is the operational, where the management will do it, but there's also transactional, where it comes the M&A and all that. That's what we do. So we believe that strategic companies should deliver an alpha, should perform better than the average market performance. So say if KLCI delivers 4% or 5% total return, our strategic companies should deliver at least 1 or 2% higher than that. So that's a philosophical belief in terms of our investment into strategic companies.
Okay. I want to go back to 2022 because that was a very tough time for all asset managers, including PNB. And I want to use that year as a bit of a case study because it showcases your resilience. You guys still delivered 4.6 cents per unit with an additional 50-cent bonus, brings us up to 5.1, 5 ringgit 10 cent. That is astounding, amazing, remarkable given 2022 markets. If I can recall, S&P fell, at its worst point, 30%. I think it ended the year down 20%. Bonds also did very poorly. I'm not really sure how we did locally, but I'm sure it was not great. How does a fund manage to deliver amazing, contextually, amazing returns given that kind of year? Okay, dividends, okay, get. Then where else are you going to get those kind of returns to post a positive outcome?
Yeah. So 2022, by the way, was a very unique year, and not only for Malaysia but globally. So if you plot, and that year was the year that the theory or thesis about the reverse relationship between stock market and bonds actually didn't work. So if you plot the year, stock market was down, typically people will move into fixed income, right? But it didn't happen that way. So both stocks and fixed income was in negative. So just to point out, it was a highly unusual year that a lot of people that went unnoticed by a lot of the mass crowd. But okay, for us, this is the beauty of diversification, and also like you mentioned, the beauty of holding strategy companies. So a lot of people, even EPF doesn't have strategy companies, but we do. And this is where you really have to manage the strategy companies to squeeze out higher than usual in terms of dividend payout ratio.
Oh.
And we didn't like force them. Well,
During the open house, it's like, come on, man.
Yeah.
You see how markets are.
yes, more, yeah. And then we always say like, you guys are unit holders as well, right? If we give below 3%, people will take away their money, and then we don't have any money, we have to probably sell you guys.
Oh.
But we managed to do that, and if you look at that year, a lot of those companies pay close to 100% of what they make.
Oh, okay.
But the good thing about that year is that although the capital market was performing badly, these companies, especially the domestic stocks, actually from operational standpoint, they were doing quite okay.
I see.
So in terms of the income, profitability, they're still there. So we squeeze out. But that's just one part of it. The other part that, we didn't broadcast so much is that we did monetize a lot of assets that year. So the real estate assets, and then some private markets that we own. You guys know we own Prolintas. Those are the big household names, but there's a lot of other private companies that we own as well. The likes of Rahim & Co., the likes of Unilever, the likes of CAF. So those are the private investment that we do. So there was a lot of monetization. But of course, we had to do it, at discount to what we believe is the, intrinsic value. But we had to do it at that year, so that we can pay out at least return that people can accept. So it's a different kind of pressure, because if you think about it, we are the only GLIC that is based on voluntary investment. Meaning, unlike EPF, where they always get the money, every month about 6 to 8 billion comes in, we have to ask you guys to continue to invest with us. So the moment we lose that trust, if we say pay below 4%, I'm sure most of you will take out the money and try to put into EPF, voluntary scheme right now. So that's always the challenge that we have. Yes, we say 200, 250 basis points above FD, but we know a psychological level that you guys cannot accept anything below, say, 4%, 4.5%, depending on the situation.
Yeah. Thanks for letting us in on what happened back then. I wasn't aware. And I think that illustrates how many tools you have at your disposal as a special Malaysian holding company to realize value for the unit holders. It's not just a 60-40 portfolio and then you 3 o'clock go play golf. There's markets, right? There's strategic holdings. There's private markets holdings that you can realize. There's proprietary trading, and then maybe even the parent co that can do you favors from time to time. So there's so many tools here.
Yeah.
So essentially for PNB, for ASB, to not deliver the psychologically acceptable returns, a lot has to go wrong. A lot has to go wrong.
Yeah. Well, I hope we don't get to that point, but really because, we carry the trust of Malaysians as a whole, so it's hard. I mean, we try to not to make any wrong decision, but if you have that mindset, right, naturally you'll be a bit more risk averse, right? So people always say like, oh, why you cannot deliver like how you used to deliver back then in the 90s. We used to give about 8%, 9%, sometimes close to 10%, right?
Yeah.
But back then the situation was different.
Yeah, the fund was smaller, so
The fund was smaller, nimbler, but at that time, I wasn't actively investing at that time. I was at school. But if you think in the 90s, even the interest rate was 7 to 8%, right? So if you do lazy investing, you just put in FD and all that, it will give you 7, 8%. And as I mentioned, we always have to give above FD. So that's naturally we have to give circa 8 to 9%, right? So it was completely different situation. But the comparisons now that we get, oh, why cannot you deliver like Bank Rakyat? Totally different scheme. Why you cannot deliver like, some public mutual funds that gives you, thin kind of returns, right? Simply because we cannot afford, one, to lose your money, and we need to deliver 5 to 6% consistently for the next of our existence.
Yeah, the mandate is very different, and you can't compare, privately managed funds and different kind of mandates lah. So I think the people in this room appreciate that lah. But I think you have to communicate with the whole spectrum of unit holders. That's why you face these kind of questions. Moving on a little bit from the fund and how it's managed and all that. If I miss something, you guys can ask later about the fund. Moving to focus on the unit holder themselves. For the unit holder, I think there are a lot of things going for it. The great return being one of them, and then the limit that was raised from 200 to 300, right? Could you list down a few ways that the average unit holder can maximize their holdings or their opportunity with ASB? So, for example, we all know the limit used to be 200, now 300, right? So try and max that out, right? We'll talk about financing in a bit. And then sometimes parents also max out their kids' punya account, and then that can stack, right? Then there's ASB 1, there's ASB 2. So there's like 600K per person already. Are there any more ways that unit holders can maximize their investment with ASB and PNB as a whole?
Yeah. So when it comes to investing behavior, right? So now typically and traditionally in the past, there's always that constant nudge that we give to people. Oh, Cik, tolonglah invest lah dalam ASB. You won't lose money. Invest in ASM, you won't lose money. But that's, from a behavior standpoint, we really want to change that. What I personally call trying to automate the discipline to invest. So automating discipline, I think especially these days, you got to do it digitally. So that's why we came out with a feature called Auto Labo. And with Auto Labo, I mean, generally it's for the mass crowd out there. We do 10 ringgit. You can do whatever, but the lowest is 10 ringgit.
Okay.
But generally it's really to automate their discipline. But actually, if the affluent segment or high net worth segment, like the people that we have in the room today, if you think about, consistent investment, it's not that hard to reach another 100,000. It's actually quite quick. So, you put 1,000 every month, within years, you'll get that pretty soon. But the other thing that I want to talk about is also the compounding effect. So a lot of people don't realize that although ASB has a limit 300,000, that actually their limit can go up to 1 million if they keep their money there, not move, and then they take out the money. Say they reach 1 million in terms of, because it has been compounded for multiple years, right? And then they take out the money, say 700,000. So it's 300,000. Doesn't mean that they cannot put that 7,000 back. They can. So that's another feature that a lot of people didn't know. And I'm not too sure if you heard recently during the budget Malaysia, PM announced that we're going to allocate 5 billion more into ASM. And ASM is really, we are very thankful for the support of the non-Bumi into ASM especially. It's really high in demand, because if you think about it, there's no alternative to ASM, because the next best is FD, right? So when we did release in 7 July, I don't know if you guys noticed, we did a drop of 1.18 billion. I thought it's gonna last like 1 week. But the system crashed at 11 a.m. and it's all fully taken up to a point that it was oversubscribed that we had to return money. But we are going to launch, and we are doing periodically over the next 2 years, releasing another 5 billion because of the demand is there. So basically, I think the liquidity is there, the understanding about ASM is there, why it's important, and from a portfolio standpoint, from your financial individual financial planning standpoint, ASM ASB is really, to me, is the base of your wealth. So I always tell people, like, you know, you can start with equity kind of funds and all that, but you can feel safer, you can sleep better at night knowing that your base is secure at 300,000. I'm not trying to do sales pitch here, but really, guys, if you think about it, fixed price is only available in Malaysia because the government wants us to invest. Other countries, you don't get this,
There's no scheme like
you know,
this.
this scheme. So if we don't use it, I feel it's a waste lah.
Yeah, well said. And I think it's your role to do marketing. So it's perfectly fine if you market a great product, not just a good product. ASB financing sometimes can be controversial, you know, because people may not have the cash flow to service the loans, and it's, you know, it's also quite a no-brainer, because if you return 5.5 to 6% and the loan is somewhere around 4%, that positive difference is like, wow, free money, right? Like, so why don't more people do it, and how should people think about doing it before they take ASB financing?
But before I address that question, I'm sure a lot of people here invest in ASM as well. Do you think it's worthwhile to have ASM financing? Yeah, but if I say, if we allow banks to do ASM financing, would you take it?
I would support it. I would take it out as well.
Yeah. So really, if you think about it, right, the thesis of, I call it wealth financing. So imagine a company, 100% equity or 100% using your own money. If your business is making a good kind of return, is really inefficient from a capital structure standpoint, right? So imagine this. Say your business is generating a yield of, say, 8% or 9%, and it can get financing at 4%, right? From a capital structure standpoint, the way you optimize your capital structure is you take as much loan as possible and then juice it up to finance the purchase of asset that can generate higher. So ASB financing only works if the returns that we give is higher than your financing rate. So essentially, you really push your portfolio returns, right? And that's how I like to look at your personal investment planning as well. So if say out of 100,000 portfolio investment, you want to put that 100,000 into ASB, right? And that generates, say, 5.75%. But you can also boost or juice it up further. I like to use the word juice it up because basically it enhances your ROE, because your ROA is generating 5.75%, right? And then you take that. So you take another 100,000, so it becomes 50-50. And from the 50% funded asset also generating 5.75%, I don't have a whiteboard to do the calculation, but technically, from 200,000, you are generating way above 5.75%, right? So it only works as long as the asset returns greater than the financing rate. So that's the only logical way. But one day, say, hopefully it will never happen. One day if PNB only gives you, say, 4%, of course it doesn't make sense, right? So again, this is super unique to our country, that if you go to, ada yang berjaya countries ke apa, you can't get this, right? Banks willingly to give you credit to do wealth financing. Of course, a ticket above 1 million and all that, they will always give you. But to banks, they can afford to give you lower rates because to them, there's no risk for banks, right? So the moment you cancel your loan or the moment you cannot pay your loans, the banks will just cash in the units. They get back their money. As simple as that. So that's why they can give you rates right now. I think the lowest for ASB financing is about 4.03%. 4.03% is super low if you think about wealth financing. And it's really the whole ecosystem of ASB financing that is super unique, and you can really leverage from that. But the behavior a lot of people taking ASB financing is really, sometimes they want to make quick money, right? So within 1 year, they will just cash out. They'll use the dividends that they get, pay out, and then get just a little bit sum of money. Well, from trading standpoint, you can, but you're really not maximizing the whole ASB financing concept, right? If you wait longer, 5 years, the advantage of ASB financing is that you put in money upfront, large sum of amount to start driving the compounding effect of ASB as a whole. But if you take it within a year or two, really there's no point, if you ask me.
So coming back to the question itself, how should people think about ASB financing? Because it's so clear that there's positive carry, right? You borrow at 4 point something, the returns are 5.5 to 6. So if your cash flow is good and you can service the debt, should people just do it? Should people max it out to 300k? How?
Yeah, it's okay. So we put a cap of 200,000 for ASB financing. You cannot go up 300,000. But it's more of there's no SC people here, right? But it's more of if you ask me, I would probably push for 300,000. But I think SC is afraid, and their concerns are valid, that it will create moral hazard or behavior, especially for those who cannot afford but still push for 300,000, right? But yeah, so it's a no-brainer, really, as long as you trust us to give you returns above the financing rate.
Okay, so it's really that simple, and really, if you have the cash flow to finance the loan, then you should really think about doing it.
If I can do a bit of commercial, right?
The stage is yours.
So we're coming out with a few goal-based financing next year, because we realized that without goals, like in 5 years' time, I want to take a holiday to say my ideal location, dream location, and all that. In 10 years' time, I want to buy a house. In 10 years' time, I want to go Haji, for instance, right? Without a goal, people's financial commitment is not as strong. So we thought, going forward, we want to introduce a loan concept that is linked to a goal, right? For instance, I want to go Haji in 5 years' time. So we give you ASB loan linked to Haji, where we incentivize you. After you completed that 5 years, we're going to sponsor some of your Haji expenses, for instance. And then for education, a lot of people don't realize that, they can really take advantage of ASB loan through education. Say, for instance, you just got a kid, your kid is 6 years old, and then you want to take a 10-year ASB loan for education. By the time your kid turns 16 or maybe 18, you have enough money through the ASB loan to start their education phase, right? The tertiary education phase. So those are the things that we thought would be beneficial to the community as a whole, to sort of come up with a plan linked to their dreams, goals, or lifestyle.
Looking forward to that. Just to close, something maybe a little bit of an interesting question, I hope. In your experience and your time as CEO of ASNB, what do Malaysians' misconceptions, so let me say this again, what misconceptions do Malaysians have about the ASB fund?
I've only took over this role for 9 months or 10 months.
But your 18 years of being in the organization.
But this part you have to tell me what's the misconception, because, or rather the crowd, let's do a bit of mythbusters here. So
Okay.
you tell me a myth, I'll try to.
Okay. So because I'm in this space where we talk about money all the time, and we have these conversations with our clients, and being in FI all my life, we have, so the very, very basic one that we have in the Mamak store is ASB a Ponzi scheme?
Nice.
Itulah. EPF also gets tarred with this thing, and
Nice.
so is they take money, how do they positive returns, blah blah, Ponzi, like, is it a Ponzi scheme?
Okay. So that's true. I get that a lot when I was looking over the strategy. So people always think that we distribute money, dividends out of people's investment. Okay, so PNB is the only GLIC under the Securities Commission Unit Trust Guidelines Act, right? Therefore, they will do annual audit. Unlike, EPF has its own act, Tabung Haji has its own act, KWAP, the rest reports to ministry, right? So technically, although they have external auditors and all that, but we, on a monthly basis, we have to provide a report to the Securities Commission in terms of our overall balance sheet, financial statements as a whole. So, and as a unit trust, as SC unit trust, I think right now they can pay out of unrealized income as well. But for ASB, ASM, we have to pay out the money that you get is really all realized income that we make. And it's in the annual report, it's audited, SC audit, and all that. So there's no payout using unit holders' money. I don't know how else to explain it, but that's the truth. But another myth that people always say is that there's a lot of government intervention in GLICs, and PNB is one of the GLICs. I have to say, after 18 years working at PNB, so I was the special officer to Tan Sri Hamad. I don't know if you know, he was the CEO of PNB for the longest time. And then I was the special officer for Datuk Rahman. Throughout my stint in those years in their office, there has never been a single intervention from the government telling us to buy this, sell that, and all that. The most that they come up with, if you guys remember, about 3 weeks, 4 weeks ago, we had an idea, not exactly an idea, about trying to monetize Prolintas a little bit. And then there was a huge noise why PNB is selling Aset Negara, Aset Bumi Putra, and all that. And then they came out with statements saying that PNB should prioritize unit holders. But honestly, we are prioritizing unit holders. That's why we're trying to sell, right? It doesn't make sense for us to keep assets that has matured or close to maturity without selling. That's how we grow. We are in the business of buying and selling assets. So that's the most intervention that they did.
Okay, maybe we can pivot to Q&A, and if you have any other misconceptions you want to be cleared up here and now, please do so. Okay.
Go ahead.
Hello, hi Sebas and Ken. So basically, my name is Amnos. I just came back from Manchester. I live there, 5 minutes walk away to Frankfurt Stadium.
Okay.
So don't mention about the loss.
Okay.
Don't mention about it. I'm being simple and dating. So I work in Amazon in Manchester. I studied there during COVID. So I watched still financial advice on the financing on the SNB. So I did that. I do the 200 straight up into two. So it was a forced area for me. I have gold, and then part of my income I put it into my training company here in Malaysia. So as a young dumb millennial, I do invest in NFT. Back then, it was a big loss at that moment. I mean, I don't have any knowledge on financing, on investing. So you mentioned about the program that for trading. Can you help us, the SME, to finance safely so that we can focus on our business? Then you guys can finance our own. Thank you.
Thank you, Amirul. By the way, I feel your pain. I mean, 20 years without winning anything. Yeah. So if you want to do a counseling group, we can work out something. But okay, so ASB alone is about 190 billion, 180 billion in terms of total asset, right? And we have to be really selective when we invest into a company, because invest in one company regardless of the size, the monitoring is the same. We have to do the due diligence, look at the company finances, long-term growth prospect and all that. So that's where, because of our size, we cannot look into SME, because say SME right now is about say 10 to 20 million, right? 10 to 20 million, if you divide 180 billion, it's definitely less than 0.5%, right? So when we do investment, ticket size is really, really important. So what?
Sorry, I think you misunderstand the question.
Oh, sorry.
I think I just want to you explain more on the tactical trading.
Oh, tactical
Yeah.
trading. Okay,
So
I heard
because-
SME. Sorry for that, bro.
Me as SME, we don't really deserve to be funded by.
No, not to say deserve, but there's other agencies doing that. Yeah. So our job is really to find companies to yeah. Okay, going to trading, right? I have to be honest. Trading opportunities is very geographical centric, right? Malaysia is really, really hard. Partly we are there to be blamed because we hold a lot. So the market compared to the global market is really, really thin. But globally, we go in and out. I did mention this before. If you think about the Mac 5, 6, we own all of them. And the beauty of it is it's very liquid. So the moment there's, at the moment Trump says something, we can react very fast, and the market is super huge. Tak payah kena call EPF, you want to take some of our stock apa, no need. So trading is always easier. Okay, the trading strategy is always about setting. That's why I said we are all about value investing, right? So we already set what is the right value from 3 months, 6 months, 1 year. We don't look from a trading standpoint. We don't look beyond 1 year. But we know what is the entry point, exit point, and we can do it relatively fast. So in principle, that's how we look at it. It's all fundamental investing.
Question. I have two questions actually. So the first question is, how much of the earnings or profits do you all retain usually? Okay, and like what do you do with these retained earnings? The second question is, what is your role compared to ETF? Because obviously ETF also in the same space, but why? I mean, how are you all supposed to stand up against ETF, or are you all supposed to work with ETF or against ETF?
Yeah. So the first one, sorry, the first one was, Oh, retained earnings. Okay. So we keep very little retained earnings. And we do that, and it's always a view that we have in the next 5 years how the market would be. So, for instance, last year for ASB, I can get the exact number how much we retain, but it's around, I think, 0.35 cent per unit. 0.35. So typically we distribute, last year we distribute 5.75, right? Technically, if you want to push to 6, we can. But we keep that so that if there's trouble the next year, there's that money there. But don't worry, because the money is always reinvested. So despite us holding that money, that balance 0.35 for instance, that money is being used and to churn out more returns for the unit holders. So if you continue to invest, typically the money is still yours. Sorry, the second question, I have very short-term memory today. It's always a struggle, right? EPF. And EPF current CEO is the former PNB's boss, if you know Ahmad Zulkarnain on. And I always tell them like, you know, you get so much money, tak payahlah nak keluar and advertise that, voluntary investment and all that. So it's always like, stop selling, boss, stop selling.
Yeah.
But EPF's role is really focused on retirement. Ours, the way that we try to position ourselves is, one, to make sure that you have money for your rainy days. One, at the very basic, because we serve 30 million. You guys are probably the minority in the affluent group. 80% of our unit holders has less than 5,000 ringgit in their account. But for these people, it's for their rainy days. But on top of that, it is a tool that you use to achieve your financial goals beyond just retirement. So that's how we try to position it, although you can still use it for your retirement. And PNB was popular before EPF beat us in terms of return, right? So if you remember, until recently, I think 2-3 years ago, we always give more than EPF. But now that EPF gives more, so people say tak payah letak dekat ASB USM lah, just put at EPF, right? But I promise you, the day that we pay higher than them will come back. But credit to EPF. EPF, I have to say, I have a lot of admiration to their fund managers. They're very smart people. So before we start to diversify, 20 years ago, in the late 2000s, they already come up with a strategic asset allocation that says that they want to go at least 30% overseas. And at that time, we were still, and I can say that this easy because we're looking back, right? At that time, we were thinking that the stock market is making 10%, 12%, and we were beating EPF at that time. So we didn't think about the rainy days when the stock market, when KLCI no longer performs. So we continue to enjoy that period until 2017 when we say like, if you don't go global, we'll die lah. And true enough, EPF is beating us now. The reason why I have conviction why we will be better than EPF is because EPF is meant to protect, and their target return is based on inflation, right? We are higher. So they are performing in this cycle because the market is to a certain extent defensive. This is where their fixed income and low volatility assets can work better, and our equity is not generating returns higher than them. But when the market turns back, when the KLCI returns, definitely there will be the period where we give more than EPF.
Okay, maybe I'll go first. I'm here, full-time investor for now. Zero holding in ASNB for now.
Oh, sayang.
But yes, so thank you so much for the insight into the kitchen, right? And I think continuation to the retained earning, you keep very little retained earning, but in rainy seasons you can tap on the proprietary fund from PNB. Can I know how many times have you had to do that in the past? Do you also, does it work both ways? Do you actually subscribe to that fund more when you have outsized returns? And lastly, is it something that is reserved for ASB or ASM also has the same safeguards? Thank you.
Good question. So the way that proprietary fund works is a one-way street. So we don't collect back from the funds because we cannot, because unit trust funds under the guideline, the income needs to be distributed to the unit holders. It cannot go outside back to proprietary regardless how much we have already pumped into the funds. PNB proprietary, the objective has always been to support the funds. So, and we don't only support through bonus. For instance, ASB typically gets a bonus, right? But in years that say ASM cannot achieve a certain what do you call it, target distributed income, PNB will come in many forms. One, we give our assets to these funds. So for instance, we have a certain stock in say Maybank, right? PNB owns say 5%. We give 0.5% to ASM to boost the income. Second, we waive the fees. So the way that PNB makes money is that you have to pay management fees, and then in years that it's stressful, we just waive it. But by the way, guys, not many people know our management fees is the lowest in the market. And it's unheard of, okay? ASB only takes 0.35% of your portfolio versus if you go unit trust as a whole, is the lowest I know is 1%. Depending on the type of the fund, for fixed income is 1%, for equities can go higher to 3%. So those are the ways that we support the fund. But of course, people ask me like, kenapa ASB selalu bagi rating dari ASM? Which I think has a lot to do with the portfolio itself. ASM only has, I would say, around 5% of Maybank. ASB has the bulk of it. So ASB portfolio, because it's older, longer than ASM, the portfolio is much more robust. ASM is building its, its portfolio, strengthening its portfolio, and that's why the opening of extra 5 billion will really help the fund to become at least as good as ASB. I hope I answer your question. Okay, no problem.
Jamas?
Yes, Faiz.
I have a question about AFP financing. As you mentioned, AFP financing is an act, including ASM. My question pertains to the rates, the financing rates. As an ex-banker, I can see that a mortgage usually has a lower financing rate than AFP financing. But also as a banker, I can see that a house can be more risky than ASB itself, because ASB has one buyer, one ready buyer. We can sell to ASB at any time. We've never seen cases where ASB wouldn't buy our units when we want to redeem them. So that should be pretty safe in terms of risk compared to a mortgage, because a mortgage has the house as the collateral, which doesn't have a ready buyer. It has to go to the auction market. It has fees to be paid to the auctioneers and so on and so on. And the auction can fail, whereas where there wouldn't be any buyer or any bids on that day. So it has to wait until next month and then slash the price and so on and so on. And the bank has the possibility of eating up the losses. The loan could be 400,000, but the house could be sold for 300,000, so the bank has to eat the 100,000. But that doesn't apply to ASB financing and the ASB units. Then why is it that the financing rates for ASB financing is usually a little bit higher? Right now, the best rate for ASB financing would be 4.05, perhaps, as far as I can tell from my friends. But the best rate for mortgage would be 3.6, 3.65, 3.7. There's always a difference between the two. Have you guys spoken to the banks, which I assume would be your partners? You invest in them and then
provide the money, and then the money they try to invest in you guys and thing like
And that's the reason why Maybank cannot give too low of a financing rate for ASB loan. There's this thing called, I'm not a loan expert, just to put it out there, but there's a thing called capital charge and ASB financing is categorized under personal loan financing, personal financing. So when it comes to personal financing, the capital charge is always higher. So capital charge is how much loan you give to how much assets they should retain within their balance sheet to give out the loan, right? So when the capital charge is higher versus a mortgage, the rates naturally goes up. There's a technical way to explain this, which honestly I'm not so much of an expert, Faiz. So before I say the wrong things, I'll just put it out there in terms of the category of the financing. ASB financing is personal loan, close to personal loan. It is bucketed as personal loan by Bank Negara. But mortgage financing is a separate, I think, loan with different capital charge. That's all I can say, Faiz. But I'm sure you know better on this, and perhaps can dig out more on this.
Okay, thank you all for your questions. Sorry, we don't have time we can have you ask questions later. Thank you all for your questions. I think next time PNB makes an announcement about dividend, maybe you guys feel a little bit more appreciative and thankful, and you take your knowledge from today to invest more with ASB and their related funds. Can I get a warm round of applause, please, for each other?
Thank you, guys.
Thank you so much.